Money Talks, the show designed to help you grow your wealth. I'm Peter Switzer. And on tonight's show, Pengana's fund manager, Mark Christensen, gives us his best income stocks currently. But first, we go to Prime Value's portfolio manager, ST Wong, to tell us how he's playing stocks for the rest of this year, which of course has the trade war black cloud hanging over it. ST is an astute assessor of companies that look like great value. So let's just see what he's finding attractive in the market, particularly after the market's had a great run since June. I want to see what he's seeing in his crystal ball going forward. Welcome, ST. How are you?
I'm good, Pete. How are you?
Very good. Now, the June rise was a beauty. It actually improved the overall performance of the stock market for the financial year. Do you have a good feeling about stocks for the rest of the year?
Well, Pete, it's interesting at this juncture, as you mentioned, financial 18 was actually a great year for our Australian market, at least. So from my perspective, a couple of points have emerged from where we sit today is that whilst small companies and high-growth companies had a great run, especially from October last year, what's emerging from where I sit are actually some old-style industrial companies, which has kind of been left behind, and I'm finding value in these companies. Companies which I'm thinking about, such as Amcor, for example, trading about 14 times for its forward earnings, had a bit of issue on rising costs hitting the profit and loss in the last 12 months, and as a result have been left behind in the current market rally. These are sort of companies which are emerging as value for me. Great management, as we know, good strong business in global markets, especially strong in the US market and in Europe as well. So these are sort of companies which are emerging as great value buys for me.
Are you also factoring in a potential currency gain, like a free kick to the bottom line?
Not yet, Pete. From what we've seen in the market, CSL, for example, I think I've had that currency kick, but not really Amcor. So if the currency kick does come through, it will be a bonus.
Okay, so that's Amcor, and you made the point that you like some old-style industrial companies. What else do you like in that space? Probably not so old-style. Reliance Worldwide is a company I still like. Had a great year, 2018. Big acquisition in the last quarter. I'm still positive on the company. I'm thinking there's still growth to come. Valuation's not that cheap, but certainly growth profile is looking very interesting from me. From where I sit, just made a big acquisition, as I mentioned, John Guest in the UK. So looking forward to how that pans out next 12 months, essentially. Tell my viewers what Reliance does.
Right. Reliance is a company which supplies a number of component parts in what's called behind-the-wall plumbing businesses.
Yeah.
So component businesses which clamps together, so to speak, copper pipes. The connectors, push to connect as they call it, that's the key business that Reliance does, and its main business really is in the US, which is at this juncture about 80% to 90% of its earnings. But acquiring the John Guest business in the UK, that will diversify its business into UK and into Europe. I think that will give it better growth into the next couple of years.
Okay, now, I'm never inclined to call you a thrill seeker, ST. You do your work, you do your numbers. Is there a financial stock that you think looks like good value? Because we know a lot of the financials have copped a Royal Commission clobbering. In recent weeks, we've seen a bit of what I call re-loving of the banks, and their share prices have improved. But I'm not trying to say, do you have an interest in AMP? Because clearly AMP is in a very difficult situation. I think the first expert like you that comes out and says, I'm going long AMP, I will have to say, courageous decision, Minister. But is there a financial stock that you've had a look at and you like right now?
Yeah, Pete, I'm not sure if Pinnacle is considered financial from your perspective, but Pinnacle is a funds manager, so to speak. It owns a lot of companies, or rather investments into associates, which I think is really prospective for the long term. So think of Magellan, things of Pendle, for example. Pinnacle kind of falls into that camp, making big investments into, I guess, very interesting fund managers, which I find very interesting. Fund managers such as Antipodes, which is a global fund manager, and more latterly into Firetrail, which is a high conviction Australian manager. So I find companies such as that.
Can I hold you up for a minute? So Pinnacle is a bit of a fund or a company that invests in fund managers that they think have a really good perspective on a market, and they effectively buy into them.
Well, yeah, in simple terms is that Pinnacle will make an investment into a funds manager, which it believes it can add value to. Well, first of all, you've got to think it's got to be good fun in the first case.
Yeah.
But certainly what Pinnacle adds to the dimension of what great fund managers are is really distribution capability. Now, great fund manager may not mean you've got a good business in your hands. It needs to be distributed as well. And that's the business that Pinnacle brings to any good fund manager in its, I guess, a basket of funds. So that's what Pinnacle does. It makes investments. It brings value add to the business in terms of distribution capability. And obviously, strong management team, very well experienced in the market, and certainly in a strong position to add to the value of the fund managers it has under its umbrella.
Okay, now what about a retailer? We know the retailers have been under Amazon pressure, or Amazon's black cloud, but some of those retailers have done a lot better than what the experts were predicting. Do you have a retailer that you like at the moment?
Yeah, Pete, we like Noni B. Noni B, as you know, has actually been around for decades. It's a retailer to a niche segment, perhaps mature type clientele, women, obviously. They just made a recent acquisition of a part of Specialty Fashion Group's businesses in Australia, and that's a really strong business in my view. So less cyclical from my perspective, but definitely a niche business, which they seem to be getting the story quite right, which is just basic, good quality, good price products into the women's market. In this case, I guess the mature end of the market.
Okay. Now, one other area that you've often shown me that you have a hankering for is a quality company that's been beaten up by the market. Have you run your eye over Ramsay? And is it time?
Yeah, interesting question on that, Pete. We just sold out of Ramsay early this financial year, this calendar year actually. We generally felt that the industry is working against Ramsay. Good management, good set of assets, but certainly from a top-down perspective, we're not willing to take the industry risk which is happening surrounding private health insurance, demographic change, which is, I guess, not favoring Ramsay on the younger cohort. So these are factors which actually cause us to sell out of Ramsay. But certainly it remains a company on my watch list. If the price becomes much more attractive, I'll be certainly willing to look at Ramsay, Pete.
Okay, ST, always great to see you, and we'll catch up in the not-too-distant future. Thanks for joining us.
Thanks, Pete.